Have you ever thought about getting in the stock market and starting to trade stocks and buying and selling stocks, but you don't know where to go, how to do it? Well, I got an answer for you. Today I'm interviewing the wonderful, the amazing Sean Temper. And he's got this amazing app called Ticker. And it shows you how to pick stocks, when to sell them, all these amazing things. I don't want to spoil it for you. Stay tuned. Welcome to Coach's Corner.
If you're over 40 and want to be the best version of yourself, Fit Over 40 with Coach Clarence is here to help.
What's going on, everybody? Welcome to another episode of Coach's Corner. You know, this is our spinoff of Fit Over 40. We'll have a coach come in who's going to drop some gems that you could use. And today's guest is Sean Tepper. He is the founder and CEO of TYKR, a software, he can correct me if I said that wrong, a software that helps people manage their own investments with confidence. He's originally created TYKR as an Excel sheet in 2016 to save time when investing. And after 4 years, he made consistent returns ranging from 15 to 50%. I'm really interested in that because I've never topped 9. So in 2019, he started sharing this Excel sheet with other investors, and everyone asked, when are you going to turn it into a software? Without further ado, Sean, go ahead and tell everybody who you are and how you got here.
Clarence, thanks for the invite. Appreciate it. Glad to be here.
Mm-hmm. Go ahead.
Yeah, should I give you that quick backstory here?
Yeah.
I'll take
Everybody
like a minute
wants
or
to know
two.
who you are besides the other stuff. We'll get into that.
Yeah. And it's ticker, like a ticker symbol
Ticker.
in the stock market. Yeah.
Gotcha.
Yeah. Right. Not the first time that's happened. That's totally okay. So my background is about 20 years in business, primarily tech. I had my first company in the 2000s. It was an agency just building software and websites for small and mid-sized businesses. Made like no money through the recession. However, we did grow a little bit in 2010, just post-recession. A larger agency approached us and said, "Hey, would you like to merge with us?" And I needed a change. I was pretty burnt out with the service business model, and I loved tech. I was looking at companies like, Netflix and Salesforce and MailChimp, and I'm like, I want to do something like that. However, I didn't have great ideas. So anyway, I went through the merger. There's no $1 million check or anything like that written. It was a situation where debts and liabilities were wiped clean. So I was given a fresh start. I could go do my own thing. So I knew I wanted to create a tech company, subscription company, something scalable. Again, didn't have great ideas. So I started doing corporate contracting. Some of the companies I work for include GE and Kohler. I planned to do that 2 years, which turned into 12 years. Sometimes it takes a little longer to achieve your dreams, but I also got into investing at the same time. So this was around 2010 or 11. I did it the hard way. I started private investing, which is like angel investing in private tech companies. I made some money and lost some money over 5 years, but a break-even strategy is not a good strategy.
Mm-hmm.
So I knew I needed to change the game a little bit. I needed to do things correctly. So I turned to Warren Buffett and Charlie Munger, started reading what they're doing, and then there's a few other books I read, and I really went down the YouTube rabbit hole. A lot of fluff out there about investing, but I found a guy by the name of Phil Town who wrote a few books. One is called Rule One. Another one is called Payback Time. He did write a third book with his daughter, Danielle, which is titled Invested. I'm sure it's great. I never read it, but he provided some of the math that goes investing. Because I knew, just to back up a second, I knew that, and Warren Buffett has said this, he could make 50% per year if he was managing $10 million or less. And I was like, okay, so he's not gambling. He's not using emotions or feelings, which means he's using some sort of logic. Now, my software engineering and project management background tells me that, okay, so there's logic there. I need to figure that out. So that's why I read as many books as I could and went down rabbit hole of YouTube. And in 2015, I started creating an Excel sheet, as you kind of mentioned earlier. And I used that Excel sheet for about 4 years. And what I did is I kind of took the calculations. I created a gamified system of like a point system from 0 to 100. The higher the points, the safer the investment. And I'll just be completely transparent. I was looking at numbers like revenue. Are the revenues growing year over year? Are the profits growing year over year? Is the free cash growing? And then, of course, are debts decreasing? If the numbers are moving in the right direction, it all makes sense and it gets higher scores. So I use this in between 2016 and 2019, my returns ranged between 15 and 50%. In fact, they were closer to that 50%. And that was when in 2019, I started sharing the Excel sheet with a few other people. They're all like, you should turn this into software. I was like, great. 10 years later, I've got a software idea now. And it took a year to build the first version. And then it took 6 months. Get this, it took 6 months to get the first paying customer. But I knew building software this long, you don't want to make money right away. Your objective is to get people on the platform for free, but in return, you want to get really fast feedback. What do they like? What don't they like?
Right.
And was able to do that, and then just kind of iterate, make a better software that people are looking for. So fast forward to today, and then I'll stop talking. We have a little over 9,000 customers in about 50 countries. And then if you ever, again, if you hear me talk about ticker or stocks or anything, don't listen to me. I tell people, go to Trustpilot, see what our customers have to say. And we're proud to say we've got a 4.9 out of 5. We're the highest in the industry.
That's awesome. Okay, so most people listening to this, at least in my demographic, maybe have 401ks, maybe they have some money in the bank,
Sure.
and they hear about investing and trading. They've heard horror stories. Where should someone start who's completely green?
Mm-hmm.
They got a 401k.
Sure. Yeah. So to back up a second, a 401k is very similar to like an index fund, ETF, or mutual fund. They're all really the same thing. Is they're a bundle of a whole bunch of stocks. They could be 100 stocks, could be 1,000 stocks. But your goal with any of those products is not to build your wealth. I know that's going to sound alarming. It's not to build your wealth, it's to protect it. It's slow and steady wins the race. You're looking at about 6 to 8%. You alluded to you never beat 9%. Those bundled products are there just to protect your wealth. If you want to build your wealth, you have to go Warren Buffett style, invest in individual stocks. And I've gotten a lot of fun case studies, but you want to have about 10 to 15 financially strong stocks. You want to buy those month over month. Now, getting started is honestly, it's the hardest part. And to give you, because I know my audience pretty well, I originally thought people would be attracted to language such as building wealth and getting rich and, investing to beat the market. All that's cute. The number one word that people care about more than anything is confidence. If people can wake up and go to bed knowing they're buying strong stocks that are making them money and avoiding weak stocks that could lose them money, and there's a lot of bad stocks out there, that is like the home run feeling. That's what people care about. So what we do is we have a really, really easy to follow education and onboarding system. When you join, you can join either the web app or the mobile app. The mobile app has learning modules built in, and of course, you're emailed a new tip every day. But we teach people about, you want to get started with like $1,000 or less in the market. You want to buy 1, 2, maybe 3 stocks. It's kind of like that moment when you're a little kid. We use a lot of metaphors. I use metaphors like you're a little kid about to jump into the deep end of a swimming pool. You're scared to death. You're going to drown, but after you do it once, like, all right, I got this. It's not too hard. The same thing is with stocks. So we help you buy those first few stocks, and then from there, we really guide you along the way. Because again, sure, making money, getting rich with the stock market, that's all fine, but it's confidence, that's the most important thing.
Mm-hmm. So I remember there was a phase, and a lot of it was maybe during COVID and maybe a little bit before, where guys were doing stock trading. They were day traders. And there were some people who did really well and some people who just lost it all. What's the difference between trading and investing?
Yeah, big difference there. All right, so we'll break it down. There's a few big ones. So investing and trading are very different. With Ticker, we're all about investing. Trading is still a job. You are trading your time for a paycheck, and get this, 99% of traders lose money. It is very hard to be buying and selling, entering the market, exiting the market. It's almost impossible. I have talked to a few people that we'll do Forex training, for foreign exchange trading, which is like you want to see the trading between countries, and you want to work about 12 to 16 hours a day. And there's most days you do not make any money. That's not a good place to be. So we teach people that instead of working for money, you flip that equation and you get money working for you. That's investing. So that's one big difference. Another big difference is And I'm going to ask you a question here. There are about 3,000 billionaires in the world. My question to you is, how many of those billionaires do you think are investors? And how many of those do you think are traders? Just take a guess.
I'll try to give you a percentage because I don't know the answer. Maybe 50% of them are traders.
0% are traders.
Oh, let's see how much I know.
No. And then of the 100% that are, or the remaining, that everybody that's a billionaire, they're a mix between stock investors, real estate investors, and entrepreneurs.
Gotcha.
Yeah. Yeah. So
Okay,
those big
so
difference.
yeah, so trading is obviously more risky and investing. How much of an education do you need? Because there are a lot of apps out there that say you can start trading for $100, and uh, how does a person get the knowledge to just know where to begin so they don't buy something that just turns over overnight?
Yeah. So we also educate our audience that you do not need to be the smartest person in the room. You don't need an MBA. You don't have to be an expert at math. In fact, you don't need to use any math because Ticker does all that for you. And our education, to be honest with you, and I did a survey on this. I asked a lot of our customers, what was your confidence level buying stocks on your own within 30 days after joining the platform? And my response, I did it to a segment and it was 100%. Now, I don't ever use that in marketing material. I say 99.9% of our customers are able to confidently buy stocks within 30 days. In many cases, it's less than 7 because the app is that efficient with guiding you through the process. We're not giving you a 400-page book like here you go. It's like bam, point one, point two, point three, efficiently as possible. So that's one point I want to make. Another thing you mentioned is you're right. There are a lot of apps out there, but a lot of these apps are brokers. Like, to take a step back, there are two types of investing platforms in the market, if you really generalize it. One is a broker. A broker is where you connect your bank account. Think of Robinhood or E-Trade. I use Schwab to buy and sell stocks. That's where you connect your bank account and you can buy and sell stocks. There are a lot of platforms out there. It's like join now and get $100 or $500 to invest. That's cute, but they don't show you, like, is Tesla actually a good stock? Is Apple actually a good stock? Is micro, the list goes on. We fall into the other category, which is a screener, an educational platform that really guides you along the way. Our top competitors would be Seeking Alpha and Simply Wall Street, which are great platforms. But those are the differences. So just be careful out there. If you ever hear this, join now, you get $100 free. It's a broker trying to lure you in, but they're not really solving the problem and helping you invest along the way.
I see, I see. So what's the mistake most beginners make then?
The biggest mistake is letting your emotions take over. And let me give you a
Yeah,
case study.
explain that.
You're gonna love this. So my favorite case study is a guy by the name of Ronald Reed. You could Google him. There's a CNBC article out there. The guy is a janitor, or was a janitor. He had passed away. But he built up a portfolio worth $8 million. How does somebody who's making close to minimum wage become a multimillionaire? The answer is you want to invest in about 10 to 15 stocks. And this is key. You want to be disciplined to buy stocks every single month, no matter if the market's going up or going down. You want to stay disciplined. Too many people let their emotions take over. And when the market goes down, like it did in 2022, we had a recession. People, guess what they do? They sit on the sidelines. They're no longer in the game. And they sit there and they wait. They wait 3 months, they wait 6 months, and this whole, I don't know if I should get in. You have to understand this, and this is an interesting statistic that'll give people more confidence. Over the last 100 years, there have been about 19 bear markets or recessions, and the average downturn duration is about 9 months. So what does that tell us? When the market does go down, it doesn't go down for long. So you got to be fearless. Don't let your emotions take over, and keep buying stocks like Ronald Reed every month. Because if somebody's making minimum wage can become a multi-millionaire, guess what? We all can.
So if someone is, talking about a particular stock and it's getting a buzz around the neighborhood or the water
Mhm.
cooler, what should you do to see if that stock is really worth it?
This is my favorite step, is log in a ticker and see the truth, because you'll see the numbers, you'll see the score. We've also got a feature in there we call it the 4M Confidence Booster. It uses OpenAI to look past the numbers and also looks at the business model. This will be helpful, and some of your entrepreneurial listeners will get this. Is like the 4M Confidence Booster. I'll summarize this real quick. It looks, the first M is the margin of safety. That's the math part of investing. The second M is the meaning. That's the business model. How many revenue streams does a business have? The more revenue streams, the more stable the business. The third M is the moat. That's how the business compares to other businesses in the same sector or industry. And the last M is the management. That's kind of like, look at it this way. Like if you're the GM of a football team and you're looking for a quarterback to win the Super Bowl, or you're going to go, down the street to find some kid that plays at the local high school, or are you going to another football team that has a quarterback that previously won a Super Bowl?
Yeah.
Answer's pretty obvious. You're going to find somebody with a track record of winning. Well, doing homework on all four M's, it could take you hours, if not days. And you could go in multiple directions. Well, guess what? We use OpenAI to streamline that down to seconds. So that way, your 4M score, you truly know what's a good stock and what's not. So yeah, I'll listen to podcasts all the time, and somebody will say, you should go buy this ticker. It's XYZ and it's got great upside potential. I'm like, yeah, okay. Let's go check it out and ticker and see the truth.
Well, if you do any kind of studying now, or you click on something in social media, your feed is inundated with all these people telling you stuff. Buy this. This is what you should do with your money. Who should you believe, and should you listen to these people on social media? I mean, some of their things look impressive, so people buy into it.
They do, and FOMO is a big part of it. If everybody's flooding into XYZ stock, it's like, well, maybe they know something I don't, and I can make a bunch of money. There's that, and then you'll talk to, a wealth professional or a financial advisor, and you have to keep in mind their job is not stock picking. It's not running businesses. Their job is to protect your wealth. And I know that because my podcast, I've interviewed a lot of them. They're like, Sean, yeah, our job is not to build your wealth. It is to protect it. And that is verbatim language. And so they're not, because for example, an advisor, in order to make money, they have to have a lot of customers, and you can't be buying and selling stocks for each customer. You can maybe do that for a handful, but a lot of financial advisors, they'll have 50, 100, 150, 200 customers. You can't do that. That's not their job, buying and selling. It's like they're going to put you in an index fund that everybody else has, and they're going to go on to the next customer. They're going to make sure you don't have the temptation to spend that money on something stupid that's going to depreciate. So yeah, there's a lot of people out there talking that may talk about stocks. I know advisors, they usually don't, but you got to be careful. And I always tell people this, and then I'll stop talking. I say, if somebody tells you to buy a stock, the last thing you should do is buy that stock. The first thing you should do is ask why. And then you step back, shut your mouth, and wait to see what their answer is. In most cases, they're not going to give you a very convincing or logical answer. It's a pretty fun place to be. I always say why, and then at the same time I just go to ticker to see, like, what are we dealing with here?
Well, I know we're talking about your app quite a bit here. How can you tell a good stock within 60 seconds or so?
Oh gosh, you log in and just see what it is right away. Like, for example, everybody's talking about Nvidia right now. They got the big stock split, the 10-for-1 coming up in a week. But Microsoft, Apple, there's also GameStop is getting a
Let me
resurgence.
ask
It's
you
like,
something
what
on
is,
that really quick.
yeah.
Those stocks have been around for a while. Should someone still purchase those right now? Are they peaking out, or?
I'm curious, is this podcast audio only, or do you do video as well?
I do video, yeah. This will be on YouTube.
Should we do a screen share? You want to see
Sure,
ticker?
sure.
Okay. You might have to, it says host disabled participant
Let me
screen.
enable that. Yep. All right, you
Okay.
should be good now.
Okay. Yeah, let's dive in. This is always fun. You get to see real time what's going on in the tool. So here's an example for you. We'll go to stocks page. I'm going to clear the filter here so you can understand at a high level how many stocks are in the platform. We got about, this changes daily because there's always stocks going public and going private every day. So we got about 37,000 stocks in the platform today. And this is over 50 plus countries because we got customers all over the world. But you can see here the menu's got stocks, ETFs. We even have crypto, but you can't analyze crypto because crypto's not a business. It doesn't have an income statement, cash flow statement, and balance sheet, but we have crypto to bring in people who follow crypto, and then we steer them towards a safer investment, which is, stock market. And you can see the 4M I talked about, watch list feature. You add stuff to your watch list. If anything changes, you get notified. There's portfolio tracker and then custom alerts. But anyway, let's take a look at NVIDIA. Because people are thinking it's a meme stock. This stock has got 100 out of 100 on the score. Higher the score, the safer the investment. In the middle is the 4M I talked about. If you can get 80 or higher, you've got yourself a really strong stock. Getting to 100 is nearly impossible there. And then the margin of safety here is the upside potential. You can see the share price today is just over 1,000. Upside potential is 5,800. So that's where it's going. So all the boxes are checking here. And if people are interested, we are one of the only platforms on the market that's open source calculations. What we mean by that is we tell people you can go here, you can see all the math behind Ticker, and if you like, you can go use it and go create your own version. We don't care. We just want you to have confidence. But you can see how that margin of safety, how all these numbers are really calculated.
So let me ask you this. You mentioned Charles Schwab as who you do your trading through. So the app works as just the guide, and then you trade through Charles Schwab. Is that what you do?
Correct. You really need two different platforms. I phrase it this way. In order to drive a vehicle, you need your vehicle and you need fuel, whether it's gas or electric or whatever.
Okay.
We kind of look at, you need your broker, which is your car, but you need your screener, which is your fuel. The two need to work together. You can, if you wanted to, you could sign up for a broker today and go buy stocks. You're kind of going blind. So if you're not, and I tell people this, if you don't use Ticker, that's fine. Then you should probably lean towards Seeking Alpha or simply Wall Street. Again, our competitors, they're great, but that way you can find stocks and not make a mistake and buy something stupid. Like here's an example. Let's go back to Ticker. GameStop is getting a resurgence. Let's see what their score is. 39 of 100. Red. 40. Yeah, 40. If you're less than 59 on the 4M, I'll tell you this, that is a bad sign. And then look at this margin of safety, 1%. But the big numbers here, you can see 39. If you get less than 50, that's not very good.
Well, look at the value where it's starting and what the estimated growth is there. Wow. Okay. So this is good for me because I went on to your website last night and I was looking around. Of course, I'm green, so I'm just going, these are good questions for me to ask. So they basically set up a brokerage account, and then this is basically like the pocket encyclopedia of what's good. And this app teaches you how to discern what's a good stock versus a bad stock. Okay. So when do you buy and when do you sell? What's the golden rule for you?
Yeah.
Because you don't buy high or, sell low and buy high or whatever, the popular thing is.
Yeah. So it's a two-step process on buying and a three-step process on selling. I'll get right to the math for you. So we tell people to buy when the stock is on sale. So, and I'll give you the definition here. I'll go to my watch list so you can get a nice overview of what are the differences here in the summary. When I created Ticker, I wanted to get as close to like a stoplight rating system because nothing's easier than sitting at a stoplight to know, okay, green is go and red is stop and then yellow is slow down, right?
Yeah.
So yeah, we've got on sale is green, overpriced is that's red, and then watch is gray. So it's kind of like your holds. So you want to look for on sale. So the buy signals would be, here's a stock I hold, which is Fortinet cybersecurity stock. You want to look for stocks that are on sale and the 4M score is 80, as close to 80 or higher. That's when you buy. So if you see any stock, and then this is not financial advice, but any stock that's on sale with a 4M as close to 80 or higher, you got yourself a buy. Now, when a stock flips from on sale to watch or overpriced, that's step one. Step two, that 4M rating drops to 59 or lower. And step three, this is a big one. If you ever heard the phrase rule, and I'm going to stop sharing here so you see me. Step three is follow rule one investing. Rule one investing means rule one, don't lose money. Rule two, don't forget rule one. What that teaches us is you never sell for a loss. You always wait. There's a saying out there in the market, a rising tide lifts all ships.
Yes.
There are times when the market, it raises everything up. You want to let your stocks, and I've done this over and over because I refuse to lose money. I made that decision. Like Warren Buffett has taught us, I do not lose money in the stock market, but I have to have the discipline to let the market lift up those stocks that are a little weaker and then sell for a profit and move over to something else. So that's your buy and that's your sell using the logic of TYKR.
Mm-hmm. All right, so we got some definitions out there that we need. What is what is an EFT versus an index fund versus a mutual fund?
Yeah, you got it. So ETF, exchange traded fund, and index fund are pretty much the same thing. The difference is an ETF, you can buy it like middle of the day and you're going to get the price at that instant. For example, let's say it's 2 p.m. on a Tuesday and you see the ETF is priced at $105. You buy it at that instant, you're going to get it at that instant. Now, with buying anything online, like through any broker, you don't get it at that exact cent. It'll just be a few cents off or a dollar or whatever. Don't split hairs on it. It really doesn't matter. But with an index fund, let's say it's 2 p.m. on that Tuesday, you buy it at that instant, but you don't get it at that price. You actually get it at the end of the day. You wait to the end of the day, and then it's assigned to your portfolio. That's the major difference between the two. Does it really matter at the end of the day? The answer is no, because they're in place to protect your wealth, not to build it. Mutual funds, I will forewarn you with those, is with ETFs and index funds, there's what's called an expense ratio. That's the cost to hold it per year, which can be like, 0.1, 0.2%. It's a really small percentage. Whereas with a mutual fund, it can be 1.5 to 2.5%. It's very expensive, and that can erode into your wealth building, something to keep in mind. So I tell people, I only recommend holding mutual funds if you're good friends with your mutual fund manager. Like if they give you peace, right? If they're your cousin or a friend and they give you peace of mind, they talk you off a ledge, you're paying them the premium. Keep that in mind. A lot of that money that could go in your pocket is going to their pocket. But hey, to each their own. But if you do go for a bundle, go for ETFs or index funds.
All right, so hypothetical, you are having a good time on TYKR and you're doing really well, and you decide to, do something new, and you buy a stock, and you get on a plane to Miami, and you're coming from the West Coast, you land and you get on TYKR, and that stock has just, as they say, blanked the bed. And what should you do?
First off, don't freak out. This happens all the time.
Okay.
The market's going to go up and down, like I phrase it all the time, like waves in the ocean. You should not freak out. Let's say the stock had a bad earnings report that day, and you come out and you're like, oh, shoot. And now the share price is lower than your cost basis. Cost basis would be your average buy price. In that case, don't freak out. You're going to wait for the market to lift it back up, and you're going to sell it, because what TYKR really does in the first place, it teaches you to enter stocks in the first place that are already strong. And there are times when they might have a earnings miss or something may happen, it'll drop down, but they usually, in many cases, they will lift back up. I had this issue with two not huge well-known stocks. One was Callaway Golf years ago. Another one was Rollins. Rollins is like, think of like Orkin, and it kills termites and pest control. It's nothing glamorous, but the situation was I bought both stocks. They changed from on sale to overpriced. the share price went lower than my cost basis. So I'm like, oh shoot, I'm in the loss. What should I do? Should I freak out and sell? It's like, nope. I'm going to follow rule one. I'm going to wait. And I think with Callaway, I waited like 6 months. And with Rollins, I waited 9 months to lift back up, went above my cost basis, and I sold for a profit, moved those funds over to something else. But again, you only get into pretty decent stocks. If you're somebody out there who makes the mistake of getting into like penny stocks, we could talk about that all day. You already entered somebody that's very risky, and you could be in a position where you're down permanently. So you got to be careful. So ticker is a great starting point.
Mhm. Okay, so how do you control emotions dealing with this? I mean, you're looking at it, you're watching things go up and down. How do you stay focused?
It's tough. It's probably different for everybody. It's one of those deals. What I like to do is I remind myself that I don't invest in the stock market and I don't invest in stocks. I invest in businesses.
Mm.
And when I put myself in that frame of mind, I understand because I've worked for a lot of large public companies. They are all working together, whether employees like working there or not. They are working on products and services that solve problems for people. And when you put yourself in that position that I'm investing in a business that's helping people, it's got multiple streams of revenue, not one, but multiple, and they're all in place to really make a difference for people. That gives me the peace of mind to realize, you know what? It's just the market going up and down. It's not the business, because businesses, and when you work for public companies, they never have a conversation like, you know what? We're going to act like a disgruntled millennial and we're not going to show up to work today. So all of us are going to take the day off. We're not going to make money for the company. Like that, it doesn't behave that way,
Okay.
right? The machine is always moving forward at 200 miles an hour, whether you like it or not, to provide products and services that solve problems. And as soon as I flip my mindset to think that way, I'm like, yeah, I'm good. I'm investing in businesses. And yes, they'll go up and down, but if they do go down a little bit, I'm not going to freak out.
Okay, so I'm thinking as a new person, I'm hearing this. This sounds exciting. I keep coming to the same scenario. I get on the app. Which stock do I pick? Or does the app kind of, after you put it, build a profile, does the app say, all right, here's where you are. These are ones that are recommended. Or do you, I mean, you know what to look for. You've been doing it after a while. But if I'm brand new and I go, I really want to invest in something,
Mhm.
but I don't know what, how do we get there?
Yeah, so when you go through your onboarding, you're just joining the app. It helps you create your first watch list. So you already got a few stocks added to your watch list within a few seconds. And then with your like every day you get a new email tip, you're going to get, not recommendations, but you're going to be able to figure out how to find stocks on your own, which is a big thing. We want to empower people to find those on sale stocks, high score, high MOS. That all training is there. So you can get up to speed pretty quick. To go a step further of things that are coming soon, because you asked a really good question. One thing we'll be doing is creating like starter funds. It'll be like a fund of like the top 15 tech stocks. And another one would be top 15 automotive stocks. Another one would be like top 15 food stocks. So you can go to your fund of choice and see the best of the best of the best within, and you can simply move forward with those. That's one thing. And then another thing we will add here soon, which is actually a service. I'll just be emailing people once a week. It'll be for one of our higher tier plans, but weekly trade ideas. It'll show exactly what am I buying and what am I selling every single week. And we've got 3 tiers. We've got premium, premium plus, and advanced. It'll be for the premium plus and advanced plans. So a few customers ask, could you provide that service? And one of the deals with product development, it's like you just listen to the customer. It's like, okay, sure, I can do that.
So I'm looking at some questions I have from some of my listeners that always kind of tell people who's going to be on. And they're kind of aligned with some of the myths you got there. The first one, people say the stock market is rigged, it's leaning towards a certain income group. How would you address that myth? Or
All
true?
Yeah, it's all a myth. And we know that because of guys like Ronald Reed. I've got dozens of other case studies of people who don't have a big income. Like, for example, one of my friends, she had enough intuition from her father telling her, when you invest, you want to invest like Warren Buffett. Just find strong stocks in the market, like financially strong businesses, businesses that even if they're popular, they want to have multiple revenue streams. They got multiple products. And she started investing in Apple in the mid 2000s. Well, she just kept doing that. The discipline, paycheck after paycheck, and she makes about, I think today, about $50,000 or $60,000, which is about average. And that Apple stock now, after about 15 years, is worth on its own about $1 million in her investment account.
Wow.
So it's right. It just goes back to, it's not income group. It's not a country club. It's none of that. It really comes down to your emotional control to say, I'm going to allocate, whether it's a certain dollar, a certain percentage every single month. We tell people try to aim for between 15 and 30% of your monthly income should be invested. If you can't get that high, that's okay. Start small, but work your way up to it. But if you can do that every month, you're creating a case study like Ronald Reed and other people I've had on the account. So yeah, it's really it's a myth that's been taught to us for 100 years that only the super wealthy can find success in the stock market. Well, now that there's millions of people flooding the stock market every day because apps like Robinhood and TD Ameritrade and E-Trade, they're all free to join and free to trade. So the friction is like pretty much gone, but there's nobody guiding these people on
Right.
what to do.
Right. Right.
Yeah.
So I'll give you a scenario. Most clients have, like I said, a little bit in savings. When I'm looking at a mortgage client, this is typically what I see. They have several thousand in savings. They'll have a big, nice 401k. Let's say they're listening to this and they're ready to get started investing. What percentage would you have them take from those sources to start? Or would you just have them leave that where it is and then just start doing the paycheck thing that you mentioned?
Yeah, good question. With the mortgage and the home, I would say leave that be. I'm a big fan of buy property because property typically does appreciate, and ideally, I'm a big fan of, you want to live in a house as opposed to an apartment, and let that house appreciate over time. Leave that be. 401k, leave that be as well for what you already put into it. In most cases you're going to get a match, so that's fine. But what I would consider doing is reducing the amount you contribute to it every month, because the return set expectations here. You're getting about 6 to 8%, maybe 10%, maybe. I would say, let's say you're contributing, we'll use nice round numbers, $1,000 to your 401k per month. Back that down a bit. Take it down to maybe 500, and let's take that additional 500. Let's go right to Ticker, find out a few good stocks, start small, start with $1,000. And then, you want to, ideally, you want a portfolio of about 10 to 15 stocks, no more. There will be the temptation to own 30 stocks. You don't want to create your own index fund. You want a nice focused portfolio. But that way you've got your house building equity, you've got your 401k, which will naturally grow. You're just going to slow it down a touch, and you're going to really put the gas pedal to the floor with individual stocks. And I talked to a lot of people in this position, because most people do feel like they're behind the 8 ball. If you feel that way, if your audience feels that way, you're not alone. That's okay. Your options are, well, you could get a second or third job and work yourself to death, or you can start making money, work harder for you. I like that option, right? So
Yeah.
I want my money, right? I want my money working harder for me. In that case, you got to go in individual stocks.
So someone, let's say, who's closer to 60, how aggressive would you want? Because I remember, like, when we all sit down, you get your 401k, they go, let's take this assessment and see, should you be aggressive? Should you be conservative? You know how they put you in a box. What should someone who's 60 saying, hey, I'm probably going to be retired in 10 years and I really want an income that I can live off? What would you say to them as far as that percentage? You'll still keep it that same percentage? Because we see the work thing is going to decline.
Yeah, exactly. So to back up a second, with Ticker, we educate people. There's two categories. There's wealth building mode and wealth protection mode. Wealth building mode, you want to be individual stocks. Wealth protection mode is when you are nearing retirement or financial independence, or if you sold a business, sold some real estate, or inherited capital from a loved one that passed away. I highly recommend you go to wealth protection mode and put that into an index fund, ETF, or you could keep it in your 401k. But I would start moving money more that direction. Like if for your example is smart because it's okay, so I've got 10 years, I'm looking at retirement. I would be saying, okay, maybe go a little into individual stocks to, really accelerate, but I would still keep a higher percentage, probably the majority in something that's an ETF index fund, mutual fund, or a 401k. So you're really well protected. And then after you officially retire, work with an advisor. I do recommend this, work with a financial advisor. Make sure you can extend the duration on how long that account is it's going to sustain you. You know the 4% rule, you probably heard of that. Like you spend 4% of what's in your account. Let's say it's $1 million, you're paying yourself 40 grand a year, and it should continue growing faster than you're paying yourself, so your money outlives you, right?
Very good. Okay, man, I could talk to you forever. There's so many ideas and questions.
Sure.
You offer private coaching.
We do not. The reason is we fall into what's called the publication exclusion. I'll keep it really simple, but there are three things we can't do. Otherwise, we cross the line into an advisor role. Yeah. So number one, all information on Ticker has to be factual. It can't be like, hey, Elon said the Cybertruck is amazing, so it's going 400% this next year. Like that's ridiculous. Like we can't say things like that. Number two, we can't do personal one-on-one advisory. It's got to be to everybody or nobody. So, right. So that's why you join the platform. Everybody gets the same content. All right. Then the number three is it can't be timed to an event. For example, NVIDIA, I can't do what's called a pump and dump, like get everybody riled up and say, buy as much of NVIDIA. And then the next day, without telling anybody, I just sell to make a profit. So we can't do anything like that. So any news we push out has to be regular, as it's phrased. So it's like here's Tuesday, here's Wednesday, here's what's going on the market today, and that's it. So yeah, I do get requests every once in a while and say, nope, you can join the platform, but I can't, act as a financial advisor.
Well, I gotta ask because I've like my attention span is like a little puppy. You got some guitars in the background. You got to tell me. You don't just have one. You have like three or four, maybe four. I can't even see the whole screen there. What's going on with that? Is that a side hobby? You play in a band or?
I've never been paid to play. I'll say that, but which is why I have a company. But but I've been playing guitar for 20 plus years. You can't see it in frame, but I got a whole half stack Marshall Randall head. I got acoustic. I got another Les Paul, but I'm a hard rock, and I don't look the part, but a metal guy. I listen to a lot of different music, but yeah, those are my genres. So I do like playing. Do I get to play a lot? No, not as much as I'd
I don't know
like,
if you
but
were like at 5 o'clock when the market closed, you're at
no,
the playing
no,
or
no.
yeah. All right, man. Sean, there is so much more. You offer great. You have a YouTube channel I saw so people can get more
No.
information. Where else can they find you and how do they find the app and get started with it?
Yeah, so the best place to start is just ticker.com, TYKR.com, and you'll see right there on the homepage links to both the iPhone and Android apps. We're a 14-day free trial, no credit card. We'd like to invite people in the platform. Test drive the car before you drive it out the lot. That is kind of the phrase we use. And then so people know we're a $15 a month play, kind of like Netflix, or 99 a year. Most people like the yearly. So ticker.com. Yeah, that's the first place to go. And then LinkedIn. I'm very active on LinkedIn. And then yeah, check out the YouTube. There's a bunch of free content there. If you don't want to get the app, that's fine. You can learn some stuff at least on the YouTube channel.
That's awesome. Okay, great. Well, I appreciate you coming on. This has been educational, and you got a new customer in me. I wanted to talk to you first and to
Sure.
see how, the questions I had, which are kind of general questions from what I see anyway. That I really appreciate the education because I thought, well, I'll just do the 401k thing, and I'm hearing these other stories, and it's really a difficult subject if you don't know anything about it. And we see the horror stories and people are really afraid to put their money out there. And listen, I'm on my channel because of all the stuff I talk about in the guest house. I get every guy telling you what to do and go buy mobile homes, and I get inundated. So I'm always appreciative when I get somebody who kind of knows what they're doing and they've got to establish success story. So I appreciate you coming on. It's been great chatting
Thank you.
with you. All right, buddy.
Thank you.
On a second here. And everybody, stay tuned. We'll be back next week. As always, take care of yourself. Be good to everybody.